Hey everyone, and welcome back to the second episode of Investing for Beginners. I'm so excited to get started with lesson 1.1, What is a stock? We have a lot to cover today, so let's get started. Well, what is a stock then? To understand, we have to back up a bit. We all know those giant companies like Apple, McDonald's, Walmart, Netflix, Disney, all those guys. Companies of that size don't just appear out of nowhere. All companies start out as a small business, just like any other small business that you or someone you know might start. Apple, for instance, started out with Steve Jobs and Steve Wozniak, working in a garage, hand-making hundreds of copies of the original Macintosh. Today, Apple is the largest company in the world, with a capitalization of over $700 billion. By the way, capitalization, or market cap, is basically how much money the company has or is worth. How did Apple grow to become what it is? Much of the answer lies in the stock market. As Apple, the garage version, became more popular and more people began buying their products, Steve Jobs realized that the company was going to need more space, more labor, and more equipment in order to meet the demand for their computers. They needed an investment. They needed someone with a ton of cash to give Apple money so that Apple could meet the demand and expand, with the condition that the investor will become an owner of the company. Think of every company you've ever heard of or used. By investing in them, or buying stock, you give them some money in exchange for a piece of that company. The size of the piece depends on how big the company is, or how much is its valuation. If you invest $5 in a company worth $100, you will own 1/20th of the company. On the other hand, if you invest $5 in a company worth several $100 million, you will only own 1/1000th of the company. We'll go into more of the specifics on what you can do with that piece of the company and the rights that shareholders have in later videos. But for now, all you need to know is that the larger the share of the company you own, the more power you have over the running of the business. So, back to Apple. They've received their first investment and are now growing steadily. They've expanded to a warehouse, bought a headquarters, and have a strong workforce. A few years later, Apple is getting huge. They're worth several $1,000,000. If the management continues to want to expand, which they all do obviously, then the company will apply for an IPO. That's an initial public offering, and it's how a company gets on a stock market in the first place, or goes public. The process is quite cumbersome, and it involves going to a large firm, filling out hundreds of documents, going to the main regulator of the US, the Securities and Exchange Commission, or SEC, and having them check out the business, and a lot more. But in the end, Apple is successful in applying. The management will settle on a price that the initial shares will trade at, and it's key to get that price correct. Make the price too high, and your company will be overvalued, making investors see no potential in the movement of the stock. Make the price too low, and your company will be undervalued, making investors think that there's something wrong with management. After all of that, Apple goes on the New York Stock Exchange, the largest stock exchange in the world. By the way, an exchange is simply a place where investors go to exchange and buy and sell stocks. Don't worry though, you don't have to go to New York every time you want to make a trade, because most of it is all online now. But the whole concept of an IPO brings up a strange question. Why do companies go public in the first place? Well, think of it like this. A company needs money to sustain itself. Going public on an exchange is an easy way to make money. When you allow anyone in the world to buy your shares, they pay you money, and therefore give a company the capital it needs. Basically, the whole thing is all for the sake of making money. So, to address the overall question of what is a stock is a piece of a company. Once a company goes public, anyone can buy a portion of the company. If you turn on CNBC, you'll see and hear people talking about, wow, Netflix is soaring today by 5%. That just means that the price to buy one share or stock of Netflix increased today by 5%. On a side, if you want to buy one share of Netflix right now, you'll have to pay over $670. If you want to find out the price of any other company, just go to a financial website like Google Finance or Yahoo Finance, or better yet, the Stocks app on your smartphone, and search up a company name. On an exchange, companies trade under a ticker, which is basically a 1 to 4 letter code. For example, Apple's ticker is AAPL, Google's ticker is GOOG, Microsoft is MSFT, and so on. Every day, the price of one share changes, based on the supply and the demand for the company's products or services. If a company does well, the price will likely go up, and your piece of the company will gain value. If you sell your share after the price increases, you will have made a profit. If the company does not do well, the price will likely go down, and your piece of the company will lose value. If you sold your share now, you would have lost money. Easy enough to understand, right? Well, the goal of investing is to find companies that in the long run will gain value. If you invest now, the price of the share will increase if it's a good investment, and you'll make a profit. Once you have the ticker and the share price of a company, all you have to do is look at other metrics and the graph to see if it's a good investment. That's my investing mantra. Use the metrics and tools at your disposal to identify companies that are undervalued, likely to perform well, or value-oriented, and invest for the long term. Follow this, and you will be very successful in your investments. So in this video, I explained what a stock or share really is, as well as the conceptual understanding of what it means, and how you can profit from it. We'll continue on the path in the coming videos, next of which I will focus on why prices move. I hope that this video was useful, informative, and fun, and that you'll keep watching this series and channel. Be sure to like and subscribe. Thanks for watching, and keep making money.